Hello everyone, today I'll give a quick update on my account, talk about the trades I executed on the 24th, and my trades going forward for next Monday. Below are the 5 stock positions that I currently have on the account. Their prices intraday as of the 24th. Ford, NNDM, NVTA, and Square were all down. I did write option contracts on the NVTA and on the Square on the 24th. So let's go ahead and look at the positions as of the close on Friday. So as of the close on Friday, I did have one option that was in the money, the Ford $9 put. I had 20 contracts or 2,000 shares. Since this was below $9 a share, $8.85, it will close my short position by 20 contracts or 2,000 shares, and I'll be left with 2,300 shares. And that will also reduce down my maintenance. And the maintenance is roughly $500 per 100 shares. If I close out 20 contracts or 2,000 shares, that would be freeing up a $10,000 maintenance on my account. And so let's look at that assignment on Saturday. And so you see my share count dropped that I'm shorting from 4,300 to 2,300. And you can see my maintenance also dropped as a result of that. I did have 2 new positions on the account as of the 24th. Closed out that Tesla 500 put option that I had because it was pretty much worthless. And I replaced it with 2 Square positions and an NVTA position. And those are all puts. Okay, so let's go ahead and look at those transactions. So looking at the transactions, you can see where I went ahead and bought back the Tesla put option that I had sold. It was pretty much worthless, 2 cents. And that allowed me to free up $50,000 in maintenance. That enabled me to buy 2 sell puts for Square and 1 for NVTA. And so that would be $22,000 for each one, which would be $44,000 maintenance for this position and another $5,000 maintenance for this position. And we can see that if we were to go back to the previous one, now our maintenance is $44,000 and $5,000 for that position, which was $50,000 that it replaced. Okay, so my trades going forward for next week first starts with the Ford. So I did have a Ford position that expired worthless. You can see here it did remove this option position of 8.5. So on the Ford position, since there's not much premium, only 2 cents for 1 week out, I will be writing it 2 weeks out. And that's kind of the standard for the Ford because the premiums are too low. When you start writing options with these low values, then you'll see that the regulatory and trade fees tend to eat up almost all of the premiums. So you're better off just waiting for 2 weeks out and trying to collect a premium that is more than 5 cents per share. So then how you would set that up, selling to open 5 contracts out of the 2,300 shares that I have available for shorting at a strike price of $8.50 and for January 8th expiration, and that is a put. And so if the stock price drops below $8.50 per share, this stock would be assigned. It would close out 500 shares of my short position. And so for this option, I do receive $45 in total. Okay, my next planned trade is in Tesla. So I'll sell the call option at $850. And you can see the volatility has dropped considerably on Tesla. So the premiums are not what they were in previous weeks. And so things have settled down. And as a result of that, when the volatility goes down, then the premiums that you receive for your options also go down. And so I'll be lucky to get 16 cents per share at an 850 call. And then my next planned trade, and this will be dependent on the Ford price. So if the Ford price does jump back up to around 9 on the market open on Monday, then I will short additional shares of Ford. If that does not occur, then I will likely buy this NVTA sell put for that. So I'll sell to open a put position at a strike price of 45. So that means if on January 15th, the price of NVTA is below 45, then the stock would be assigned 1 contract or 100 shares. And so I would increase my position from 400 shares to 500 at that point. If it's above $45 per share, then I just simply collect this premium and that's it. And there's no stock assignment. Let's go ahead and just take a look at the volatility of each one of the positions. So when I go in TD Ameritrade, they do have a probability analysis chart, and they do list the volatility for each one of the stocks. So the very first one being Ford, so it's one of the least volatile stocks. There's a 90% probability that the price of the Ford stock will be between $9.58 and $8.15 for December 31st. And so I have 2 options. So one is at the 9 and one is at the $8.50. And I've done this in the past, and these numbers aren't really that accurate. Again, it's only taking the volatility of the stock and really the price into consideration. So it doesn't take into account news that may be upcoming or events. And so this can be quite a bit inaccurate. And you kind of see that also too when we go to the Tesla as well. Even with the volatility down, the numbers that they come here with for the probability doesn't seem to really reflect where it will go in the coming weeks. Okay, so that is the Ford. So let's go into the next position. So this is NNDM. Here are the probabilities of the different breakouts. So I did write a sell call option at 10. So what's the probability that that will be in the money on January 15th? Based on the volatility and the price. So that is now at 32.61%. And you can see the volatility on the NNDM is the highest of any of the stocks that we'll be looking at, 171%. So it's quite volatile. The next position, NVTA, one is at 55. I wrote 2 call options, and so there's a 20.7% chance that it will be in the money based on this probability analysis chart. And the price on January 15th will be somewhere between $65 to $33 per share. Basically a 90% probability it will be within that range. And then I also wrote a put option and 2 call options at 50. So next one is Square. So in Square, I wrote 2 sell puts. So what's the probability that it will be at least 220 per share? And so you'd basically add up these 3, or you could take and subtract these 2. So looks like about a 75% chance approximately that it will be 220 or above. And at that point, then I would just simply collect the premium and then write 2 more sell puts. And this is on December 31st. And there's a 90% probability it will fall within the range of $250.72 to $207 per share. And these numbers are updated daily for each trading day. And then lastly, let's look at the Tesla. We see the volatility has dropped quite a bit. It's down to 70%. And as a result of that, the premiums have dropped quite a bit as well. And so what is the probability that it would be above 850 on December 31st? It's only a 0.03% chance. And so they're estimating that it's going to be likely below $700 a share, with a 43% chance it'll be below $650, which this particular number I don't really agree with. With its S&P inclusion, it's going to be very stable on the downside. Anytime that there's dipping that occurs in the price, there will be shares that will be purchased. And so I think it's highly unlikely that it would be below 650 unless we have some type of significant market crash. And then lastly, just kind of showing my overall planned trades for going forward for next Monday, and then the actual premiums that I have received from the options that I have sold to date. So I actually have quite a bit of options that are in play right now. So there's really not going to be much trading activity that I do for next week other than these potential positions right here. And so also the call option, the probability of that being in the money is 0.03%. With the Ford, that's about a 33% chance that that would be in the money or below 850. And then that would be closing out 500 shares in my short position, but that doesn't expire until 12 days out. And then NVTA, basically a 43% chance that that would be in the money. Again, I don't really agree with that one. I think that the stock price will be higher when we reach that January 15th duration. But that's the numbers that's giving. And you can see the numbers here too as well. So Square, roughly 27% chance that that would actually be in the money. That means below $220 per share. That would result in me receiving 200 shares of Square stock, which is what I sold the contract at when I last had a position in Square. And then here you see my 3 NVTA positions. So I do have 1 sell put at 50, which means if it drops below 50 on the expiration on January 15th, then I would be purchasing another 100 shares of stock through that option assignment. And then I have 2 call options for 50 and 55. And so I have a total that I received in premiums so far of 2,000, and this would add another 364 in premiums as well. So that's all I have for today. All right, thank you. Bye.